Hello everyone, Jocelyn Predovich, President of Lime Tree Lending Group. You've either lost deals or you're going to lose more deals because of information you just don't know. Whether it's information you don't know or because you're being lied to, it's costing you lots of deals. Now, that should make you throw up in your mouth a little bit because as we all know, our market share is smaller, or the prospects we have coming at us are a lot fewer than they were before. So our closing ratios better be sky high. And what I mean by that is there's so many things that can go wrong in a transaction, and we need to make sure that we have every tool available to us in our toolbox to get deals closed. The loan program that I'm going to share with you today eliminates 99% of issues that can come at you during a transaction. Now, that is huge. If you have, whether you have inspection issues, or you have a low appraisal, or you have clients that love the house, but this loan program that I'm referring to is the FHA 203K loan. Now, it's the most misunderstood program and quickly becoming the most requested program by our clients. Now, this email that I've included has a checklist of lots of things about this loan program, and I'd like you to go through this email as well because it would make this video way too long that you're not going to want to watch it. But anything from inspection issues that can be resolved to appraisals that are low to health and safety conditions on an appraisal that can go away. The FHA 203K loan, for those of you that don't know, this is a loan program that allows you to roll in anything, whether it's repairs or updates, into the loan at the time of closing, and then your client has the money to spend after closing. None of the work starts until after closing, which is why your closing turn times are the same as a normal transaction. Now, most common misconception is I can only roll $35,000 into the loan. Not the case. You can go up to a loan amount of $406,250. Now, that's for the Denver area in case some people are watching from outside of the area. So you could technically buy a house for $200,000 and roll $200,000 in, whether it's because you wanted to do carpet, painting, new kitchen, new bath, or because you hated the house, you wanted to scrape it completely and rebuild it. Everything can be done with this loan. Structural issues can be tackled with this loan. There are certain things that do fall in the landscaping category that could be wrapped into this loan as well. Your garage, you could build a new garage with this. I know a lot of people came at me last week and said, could I add a garage? Because I have a house my client loves, but no garage. Really, this loan is anything that the client, either because they're in the car and they love that house, but it'd be perfect if it had this kitchen, but I don't have the money to do the kitchen. For every $10,000 you roll into this loan, you're talking about $50 more a month in a monthly payment. So it gives your clients the ability to leverage the bank's money to make any house completely customized to what they want right after closing. So it's super powerful. Now, we are going to hold a class on October 20th, which is a Wednesday, from 9:30 to 11:30, and this is for 2 CE credits, and we'll tell you everything about how to use this, how to make an offer, how the bids work, how the contractors work, and you get 2 CE credits. So if you want to register for that, go ahead and send me an email. I'll get you down on the list. We'll have breakfast there. There is no cost for this class, so just a heads up. One of the things, too, that people think this loan is only for repairs. It can't be done just because the client hates the kitchen. Not true. This loan can be done, I don't care if there was a brand new kitchen in it and the client just really didn't like it. You could totally redo the kitchen. It doesn't have to have any sort of grounds for repairs or remodels. It's whatever your client desires. So this loan is so powerful. Check out the before and after picture to the right side of the this email that goes out. It's some clients that were able to use the 203K loan to completely redo basically their whole main floor. You can take a look at the before and after pictures. Interest rates, people typically think that the interest rates are a lot higher on these loans because you're told that. Not true. The interest rates are actually similar. In some cases, at the most, they're 0.25% higher than the regular FHA loan. Now, what does this mean? It means about $28 a month on a $200,000 house more if you did an apples-to-apples comparison with the higher rate. What's also important about this loan is it can be used in conjunction with first-time home buyer programs. So you could do a CHAFA 203K loan. You could do a HUD $100 down with a 203K loan. So client does a $100 down payment and gets to roll in the world to customize their house. Are you kidding? We're usually told right now, nope, you can't do that. No, you can't do that. This loan allows you to do everything. It's crazy. Trying to see if there's any other thing that you guys would be super excited about. The biggest thing as far as why you're lied to. Now, I don't want to throw anyone under the bus, but 95% of banks in the Colorado area cannot do this loan at all. Now, there are some banks that have access to this loan, but it's in a very watered down version. It's called the FHA 203K Streamline, which doesn't allow for anything structural. It only allows you to go up to $35,000. It's very limited in what can be done. So for those people that do have access to it, they might have access to a watered down version. So if you start getting fed like, oh, we can't do that, we can't do that, you know they can only do the FHA 203K Streamline. But you have to think about it that in the case that if somebody they don't offer the FHA 203K loan, they're not going to, one, educate you on it. They're not going to promote you on it. In fact, what we're getting told is people are steering people away from the loan with scare tactics. Oh, that loan will never close. Rates are so high. They're impossible. You don't want to go there. The closing time's 90 days or more. My most favorite one recently is the government stopped doing FHA 203K loans. Wow, that one was clever. So just be kind of on the lookout as far as what's going on out there. You are unfortunately getting lied to because they don't want to send you out the door to a competitor. So be on the lookout for that. The other thing I want to give you a heads up on is even at the banks that do offer the 203K loans, very few people within the bank even know how to get them closed. So make sure you're working with a professional on this. Now, if you do want more information, we have a whole website put together. We even wrote 2 ebooks. You can go to Colorado203klender.com. I'll include that in the email as well. And go check it out. You can watch the videos, download the ebooks, and share them with your clients. So don't forget to register for the class. If you have questions on it, definitely let us know. We're around. Have a great day. Bye, guys.